What's going on? Welcome back to the channel. Today we're going to talk to you about him and hers health. I want to go over some of the data points, break it down on what is really moving it, and go over everything else you need to know. But first, make sure to hit that thumbs up, and with that, let's get right to it. So it is down 3.42%, 37.75 the low, 39.78 the high, and 5.9 million shares being traded. 23.2 is the average. So very low volume. But then again, it's not just HIMS. Everything is experiencing lower volume because nobody's really buying leading into the Fed decision rate. So that's going to be coming out in an hour and a half, give or take. And it is fair to assume that we're going to be getting a 25 basis point cut. That's what's been largely priced in as of last week, in my opinion. But what is going to be said afterwards by Powell, that's going to be the big market mover. That's what everyone is kind of hesitant on, because ideally, we'd want to hear saying that, hey, you know what, January 28th, we might be seeing another kind of cut, right? And that's would be a huge catalyst for the broader market. And most likely the market's already determined that is going to be the next big catalyst, right? The market's always forward looking for the next big thing. So if Powell comes out and very hesitant and whatever else, as what he typically is, that might kind of mess things up a little bit. But nonetheless, though, that's kind of what's affecting HIMS today, as well as the broader market. When it comes to the stock, though, they did put out news saying that they're bringing their weight loss program to the UK. So this is good. Expansion out of the States, a whole new, for the most part, untapped market, because there's not really that much going on in the UK for that, especially with all the regulatory requirements. So HIMS has kind of passed all that, large barriers of entry. So definitely, I think this is a pretty good catalyst for him and hers health. Most likely won't be seeing too much for updates, at least probably until Q1, I would assume. But nonetheless, I think that this is a pretty good catalyst. Market doesn't seem to think so, because I think it's just fixated on the interest rate decision, because that's going to be a very big deal for the broader market. And this is why we're not really seeing that much in kind of institutional transactions. Right now, no transactions on the secondary market above $100,000. And you do see quite a lot on the dark pool. Dark pool is often enough used by hedge funds as well as shorts. At the time of doing this video, shorts are returning roughly around 27,000 shares. So again, they're not really doing too much. At its peak, looks like they kind of increasing 134,000 shares. So again, they're not doing much at all. 32.9% of the free float is being shorted, though. That is crazy stuff. And so ultimately, unfortunately, I don't pick these colors. This is always changed by Ortex. Even if I hit refresh, it'll have all different colors right here. Sometimes, maybe not. But nonetheless, you can kind of see that shorts have just been lingering for a while now, ever since pretty much October. So I think that over the next probably month, there will be a pinch. Either shorts will start to kind of taper off and return back to where we were, maybe like 20% short interest, or they will double down to all-time high numbers again. So it's going to be an interesting next little bit. DTC being at 2.54 days, so that does signal that shorts are relatively overextended. But then again, I think everyone kind of knows that at this stage. DTC does factor in the average volume for the stock in comparison to number of shares being shorted. Looking at the options, though, 4.5 million in calls, 2.4 in puts. 50% of all the options being done are bearish in nature. Bulls, they're kind of under the impression that it'll recover to 40 to 41 this week, and it looks like 41 to 42 the following week. Bears are anticipating for it to be kind of sub 36.50 to 37. So it's a little bit of a back and forth. And again, I think a lot of that stems back to the interest rate decision. Nothing really to do with HIMS, aside from their technicals, which I will kind of go over in a second. But aside from that, with it at 38.46, it is trading between this pivot and this S1. So this is looking at the one-day chart. So very wide gaps because HIMS is fairly volatile. So you do have wide gaps here because of that. 40.33 is going to be that key pivot that you really want to watch for it to ideally get above this week. Flip side, 34.42 and then 30.77 is going to be the next strong support points. So if you're dollar cost averaging, swing trading, just kind of watch out for those. Aside from all that fun stuff on the actual chart, it's kind of holding up a little bit, so it is flirting currently with that 10-day moving average, and that's a big deal for a lot of momentum stocks. So if it does break below that, then you could potentially see some consolidation, but nonetheless, though, I do feel that's actually bounced off of this kind of good support level fairly well, so 32.88, but still this has been one crazy sell-off ever since kind of $64, $65 to around 32. That's some very insane stuff. So this is a very big sentiment killer, and this is why you see a lot of people really negative on HIMS. But this might be unpopular opinion. When people are bearish, this is kind of the time that you need to buy. So in my opinion, regardless of what Powell does later today, I do feel that the growth behind him and hers is solid. Their expansion clearly on point. So I think overall, at least this should get back to that 50-day moving average, which is roughly around that $45 range right quick. So that could be a good swing trade, but still bigger picture, all it needs is that nice gentle push and it'll break above 65 and stay there. And then people will be looking back at this time frame and wish that they did buy more. One thing that you could always do though is look at long calls. A lot of people don't ever buy long calls for whatever reason, because maybe they think that they're going to lose money or they just don't know options. But for instance, if you do feel that it's going to get back to, let's say 60 by throwing out June, for instance, that is a 55.72% upside from the common stock, but you could make 111.48% from a long call. So whenever the market's kind of very bearish and you buy a long call, that's when you can make the most money. So just throwing it out there, you guys do with that information what you will. So let me know your thoughts on him and hers. Are you buying? Are you selling? Where do you see things going in the short term? One final thing, pop over to my Patreon if you're looking for some solid buy signals on stocks, options, crypto. Put out daily day trades, numerous swing trades. Worthwhile to pop over there and check that out. With all that said, appreciate all of you watching.